today's webinar. We are thrilled to have you joining us. We want to start off by recognizing that these are difficult times for everyone, and we're hoping that today's webinar reminds us of the different communities that we're part of, whether we're meeting in person or digitally. My name is Sarah Ebrahimi, and I'm currently one of the co-chairs of WIN, the Women Impact Investing Network, along with Baba Wadwa. I've been a member of WIN's board since its inception in early 2018, and it's so exciting to see many new faces as well as familiar faces that are logged on today. For those who are joining a WIN event for the first time, a little bit about us. The Women Impact Investing Network is based in Washington, D.C. We're a volunteer-run organization, and we aim to create leadership and knowledge-building opportunities across the impact investing sector for women who are working across a diverse spectrum of focus areas and organizations. WIN events, of course, are always open to men, even though we started as a strategic initiative to catalyze women's knowledge and networks in the D.C. ecosystem. So over the course of 2 years, we've grown to nearly 500 members, and we're always looking to accelerate our shared objectives of deploying capital for social and environmental impact. Across the network, we represent capital providers of 170 different organizations across key stakeholders. Our members span public, private, venture capital, private equity, and corporate sectors. And so since WIN was created to address the issues that women face in impact investing and the funding space, all of you being part of the webinar today, you're not only here learning a bit more about one angle of the problem, but you're also all part of the solution. So we genuinely thank you for being here. For those that have been to WIN events in the past, you know that we highly encourage networking, usually with wine and cheese and lots of time, both before and after our learning panel events for getting to know each other better. So as you see, we want this to be a really active chat. We want people to be interacting as much as possible. And so while everyone is currently muted during the first part of the presentation, I encourage you to use that chat feature to share your thoughts, your real-time reactions. If you have any personal experiences that relate to anything that the speakers are sharing, definitely do put them in the chat, along with any questions. I'll be monitoring the chat for questions, and once we do get to the Q&A portion, we will be addressing those. And also to facilitate the network angle of it, for those that are just now joining, you'll see that people are putting in their name, their contact information, where they're calling in from. So please feel free to do the same, and also feel free to use the chat feature, since you can contact individual people within the webinar and reach out to them directly, make an introduction, or ask if you can connect later via LinkedIn. Definitely encouraging that, because we all want you to get as much out of today as possible. And lastly, since this is our first webinar, please do bear with us if we encounter any technical difficulties. Fingers crossed, we're all now experts at connecting virtually by now. So welcome to the webinar. Without further delay, I'm going to pass the mic to our co-hosts for today, WIN board members, Lily and Camille.
We can't hear Lily and Camille if either one of them is speaking, so one of them is on mute, maybe.
Hi, I'll introduce myself. My name is Camille Jones. I am the director of PAC at Forum Analytics, a public affairs software company here in DC. I'm also the founder of Carry Capacity, an organization to support Caribbean entrepreneurs that are focused on sustainability issues in the Caribbean. I'm a new WIN board member, and I'm very excited to be a part of a network that supports not only women entrepreneurs, but other professionals that are interested in impact investing. Lily?
Yep, thank you, Camille. And can you all hear me?
Mm-hmm.
Okay. Thank you, Camille, and thank you, Sarah, for that nice introduction. Just to echo what Sarah said, I want to thank everybody for logging in today. These are definitely uncertain times and difficult times, to say the least. So I hope everyone's doing okay. I also want to wish everybody a happy early Passover, Easter, and springtime. Again, my name is Lily Beidel-Horton. I'm a newer WIN board member, and I'm very excited to be taking on a larger role within the WIN community. My full-time job is a financial advisor at UBS, where I'm part of a wealth management team. So in addition to doing financial planning and financial investing, I also coordinate our team's sustainable investment strategies with a focus on gender and gender lens investing. And now I'm going to turn it back to Camille to get us going with somewhat of an interactive portion of today's event.
We're going to have a poll. We know that many of you are logging on from all over the world, that come from many different backgrounds, and we wanted to make this as interactive as possible. So where are you logging on from today?
And quickly, as you answer, please click on submit twice, okay? So double click so we're able to actually capture your answers. Thank you so much.
Oh, okay, so the majority are from Washington, D.C. and the East Coast. And a good percentage internationally and elsewhere in the U.S.
Let's give it another 30 seconds to finalize. But yes, Camille, it seems like you're right.
We have Sylvie that's dialed in from Australia. That's great.
Thank you all for joining us today. Awesome. So 79% of us are from the Washington, D.C. metropolitan area. That's great. And let's go to our next poll. So for those of you in the DC area, have you ever attended an in-person WIN event? Or is this your first time joining us? Okay, 50-50, roughly. So we have some new members here. Welcome. Fantastic. So let's go to our next poll. Perfect. So who's in the audience today? What sort of backgrounds are represented today in the audience? We have some entrepreneurs, investors, impact investing professionals, others that are interested in this industry.
Yeah, if you're an other, please send it through in the chat what your background is, because this is really going to help our speakers be able to tailor the content of what they're presenting.
Okay, so we have a good amount of impact investing professionals represented, and some others as well. We have a few entrepreneurs, a few venture capitalists, and as well as investors. But yeah, I'm curious to know what are some of the other roles that are represented today.
Camille, shall we launch the last poll?
Sure, go ahead. In your opinion, what is the biggest barrier preventing women entrepreneurs from securing funding? Is it lack of networks, mentorship, technical assistance. Networks. Well, overwhelmingly, the audience and the attendees are voting that networks are the biggest barrier preventing women entrepreneurs from securing funding. Okay, that's good context to get into our discussion today. Thank you all for participating in our poll. Lily, over to you.
Yep, so now we want to jump into the topic of conversation today. So the topic today is identifying and eliminating gender bias in VC funds. It doesn't come as a surprise to me, or I believe anyone else who's here today, that there's a significant gender bias in VC funding. I'm confident we're all already aware of this problem, so today shouldn't be about diagnosing the problem. Instead, we want to identify factors that prevent women from securing investment dollars, discuss trends in VC that are creating opportunities for women, and share best practices for female entrepreneurs looking to secure funding. So with that, I want to introduce one of our panelists, Kay Shelley Porges. I met Shelley when we spoke on a Gender Lens investing panel together a while back, and I was instantly impressed and taken by Shelley's charisma, her dynamic career, and vast array of experiences. So I'm thrilled to have her joining us here today. I know that she's definitely going to leave us all with something to think about. So in the spirit of win and being interactive, Shelley, I'd like to invite you to introduce yourself and share with us a fun fact.
Great. Thank you so much. Well, it's such a pleasure to be here, Lily. Reconnecting with you as well as having met some of your colleagues on the WIN board and knowing some of the work that you're doing. It's really important in advancing the ecosystem. I have a trisectoral career, just by way of personal introduction, in that, I started my career in the corporate world, ending up as head of marketing for Bank of America during what was a historically challenging time. And we had one of the biggest turnaround in American corporate history at the time that was not government aided. So no one can think back. This is way before the Great Recession. This is in the late 80s, and I was quite young, 34 at the time when I started that job. So, but it was a very exciting time. From there, I transitioned to the entrepreneurial world, was a serial entrepreneur. Lived in the Bay Area, where I would say entrepreneurship is a disease. Even if you sell your company, you end up starting another one. And so indeed, I started 6 companies with 5 successful exits, moved to DC in 2005, got the political bug when Hillary Clinton declared for president, worked with her, for her or with her over about 8 years, was with her at the State Department as her senior advisor for global entrepreneurship. And then left there, and after 2016, came back to the private sector, really to address this issue of the disconnect between the trillions of dollars that are being invested into early stage and later stage companies, innovative companies, and the growing number of women innovators who are building companies. And to that end, in 2018, launched the $1 billion fund for women. And I don't know if now is the appropriate time. Maybe we let Heather introduce herself, and we could come back and talk about the $1 billion fund for women and our newer initiative, which we call Beyond the Billion.
Perfect. Thank you, Shelley.
Our second panelist is Heather Matranga. She's the Senior Director of VilCap Innovations at Village Capital. Heather has been leading a number of recent gender financing gap initiatives, including some really compelling research done with the IFC around closing the gender funding gap in accelerators. I'm also very excited to bring Heather on due to Village Capital's leadership in creating new investment models, inclusive investment models for the venture capital industry. Thank you so much, Heather, for being here today. Heather, I would love for you to share with us some more information about your background, and if you could share a fun fact with us, that would be great.
Sure, yeah. Thank you. That was a great overview. I'm really honored to be here, honored to be on a panel with Shelley and to participate in this WIN event. And love that we're adapting to this more virtual environment. And it's great to see some familiar names in the participant list, although I know that many of you do not have your video on. So just by way of background, I have been with Village Capital for about 4.5 years now. In various roles, I currently lead our strategic innovations arm, which I'm happy to get into more detail as we move forward with the presentation and kind of give an overview of Village Capital. And we're really focused at Village Capital on supporting underrepresented entrepreneurs and entrepreneurs that are having impact on some of the critical problems that we see globally. And not just doing so by focusing on who we're investing in, but focusing on how we're investing in those companies, and can get into some more detail. Before Village Capital, I spent 5 years in another life as an attorney for the Federal Emergency Management Agency, which of course has been front and center in a lot of the COVID response right now, and then sort of transitioned into working in the impact investing space. So thank you for having me. Oh, fun facts.
Yeah.
So this would be very obvious if we were in the same room together, but since we're virtual, it's probably not as obvious. So I'll stand up and just say that I am 8 months pregnant. That's what's up.
Oh, wow.
Congratulations.
Congratulations.
Yeah, I guess I forgot a fun fact. Mine is, I was encouraged, though, after I left the State Department, to remind people, I'm actually an immigrant American. I was born in Israel, came to this country when I was 5 years old. And, you know, given some of the issues around immigration, I feel more and more increasingly strongly about noting that, you know, I, like, you know, actually most Americans or their ancestors are immigrants to this country. So I just thought I'd mention that.
Thank you.
So we're going to move on to the presentation section of the program, and we're going to start with a video from Shelley's organization. Shelley, over to you.
Thank you. Thanks so much. Well, as you undoubtedly saw there, you know, no one builds anything big by working alone, and maybe that's the first clue to how we all get together to solve some of our problems, including addressing gender bias, which is what we're here to speak about today. So I just want to acknowledge my co-founder and managing partner, Sarah Chen, who's on the line, I know, who's on the call here with us. So at any point in time, I might call on her to say something. But, you know, Sarah and I launched the $1 Billion Fund for Women, as you saw, in 2018 to address what was the massive gender venture funding gap. And just to share with you where we were coming from, imagine if you had, as a female founder, had found a technique to build a human organ out of a patient's own stem cell. And then imagine if you had gotten the patents for the technology, you know, lined up the regulatory approval, lined up clinics and hospitals ready to deploy it, as well as medical practitioners and experts, et cetera. Set up a company, and then you still couldn't get funding. And you may or may not know, but millions of people die, not just from not getting organs on a donor list, but not even getting on the donor list to begin with. So what a breakthrough technology this is and was. Well, this is the story that was told to me by a founder when I was the president of the Cartier Women's Initiative Awards, president of the North American Cartier Women's Initiative Awards. Eleni Antoniadou, a number of years ago, brought the story to us. And while she did end up being Cartier's laureate in North America and did get Cartier funding from it, she couldn't get funding from anyone else at the time. And that was such, that hit me so between the eyes. And you know, so many other innovators who came, not only through Cartier, but those I met, you know, in my time at the State Department all over the world, made it clear that, you know, something had to be done. And while we are now, many in the industry are now focused on initiatives that, you know, bring more women VCs in and support them, train them, mentor them, that's fantastic, but that doesn't change things in real time. So Sarah and I, having an opportunity to present at the World Bank meetings in the fall of 2018, decided to launch the $1 billion Fund for Women. And in less than 9 months, as you saw from the video, we were able to mobilize over $1 billion in pledges to be invested into women-founded companies by the end of this year. And I'm happy to report that at this point in time, we're in our midterm assessment, and over 50% of the funds have already deployed significant amount of their capital, anywhere from 30 to over actually 100% of the pledge that they made. So we're thrilled to, report that, and we will continue to collect data from our funds, and at year end or right after year end, we'll be, publishing a full report on not only how have the funds fulfilled their pledges, but also the numbers of companies, the kinds of companies, as well as the impact that we believe they will be having. So that is the $1 billion Fund for Women. Now, having said that, we realized right away that we also had to move beyond that, because as soon as we surpassed the billion, which was last year, we were being asked, what now, 10 billion, 20 billion, and the realization that why cap it? There are trillions being invested, and we need to bring more capital into this marketplace because women are innovating across the globe. And so we launched Beyond the Billion to draw in pledges from LP investors to invest into women, into funds that will invest in women. And by the way, maybe it won't surprise you to hear that a majority of our funds are also have women GPs, the general partners that are managing those funds. And and they too are entrepreneurs who, who are themselves needing to raise capital when they've deployed the funds they've already got raised. So what we're trying to do is create a virtuous cycle that will draw capital in that will be deployed toward women founders at all levels. So I'll just stop there.
Thank you. And Shelley, as a follow-up question, and I encourage anyone to submit questions at this moment if you want to ask Shelley anything before we continue on with the conversation. But something that occurred to me after seeing the poll results was that a lot of people felt that there was a lack of mentorship or networks, and that was a big barrier for entrepreneurs and female entrepreneurs. And I want to ask you personally, in your own experience, how you created or grew networks of your own, or did you have a significant mentor who really contributed to your success?
Well, I was really lucky throughout my career to have both male and female mentors. But and it's something I worked on. I don't think that, someone once said to me, you're so lucky you had this person as a mentor in your company. And I think what you have to realize is you don't pick your mentor, the mentors pick you. If they think that you're someone who can contribute to their success, then they will pick you. And I do have to, not to say that I'm Sarah's mentor, I think we mentor each other, but Sarah approached me when she was new to this country and new to DC. Knowing that I was, had been in the community for a while, asking me to help plug her into a few different organizations, which I, extended some invitations to her. And then she asked me, how can I help you? And that's just about the time that we were beginning to think about launching. I was beginning to think, this $1 billion fund for women. And, she said, can I help you with that? And I said, sure. And before I knew it, she wasn't just a helper. She was a leader. And she demonstrated that, she was as much of a co-founder and a managing partner as I was, which is why, about two months later, when we actually launched it, and we only worked on it for about less than 2.5 months before we launched it on October 11th at the World Bank meetings in Bali 2 years ago, or a year and a half ago, actually. She was every bit the, leader and manager and strategic thinker that I was. We have our different strengths and, so forth. So I believe that we complement in many ways, but there she was. And so she became the co-founder and managing partner when, that's how it starts. So where you can add your value. And I think, folks who are in positions to make decisions about your career will see that and step up to it. That's my recommendation as far as mentorship is concerned.
Thank you. I want to direct you to one of the questions that Sarah just put in, which was, she's wondering if there are any cultural aspects or differences you observed, especially during your time at the State Department.
Yes, definitely there are cultural differences. I'm trying to remember where this was now. It wasn't so. I was at a university in the Mediterranean. And where in America, when I'm at a university speaking, I mean, I'm generally encouraged to see that women will generally be as inquisitive and ask questions as men are in the audience. Whereas at this particular university, I was just shocked. There were plenty of women in the audience. None of them asked questions in the Q&A. But as soon as the talk was over, they swarmed me and were filled with questions. So this whole notion of, sharing what you have to know, and your questions are something that it's what you've thought about. And believe me, if you have a question, other people in this audience have the same, some other people at least in this audience will have the same question and will benefit from your answer. So, the fact that they were, and one of the things I said to them is they swarmed me, because at first I was really being troubled by the fact that no women were asking me questions. But when they swarmed me, I said, so why didn't you ask the questions during the Q&A? I said, you need to step up. You need to, make yourself known and let people know what's on your mind as well. So there was, that was one aspect of cultural difference. Certainly there were cultural differences, but one of the other stunning things was when we hosted a startup weekend in Alexandria, Egypt, 9 months after the Arab Spring began. We first of all got the most extraordinary response. 2,100 applicants. The average in the U.S. or in a developed country would be something like 100 to 125, maybe 150, but not in the thousands. And of those, in the end, 800 participated, and of those, 200 were women without us having done special outreach. And so I think we a lot of times presume things about other people's cultures and women's participation, but that really impressed me that. And by the way, the winner of that huge Startup Weekend competition was a woman-led team, and she went on to get funding from one of Egypt's top businessmen. She wrote to him after she won this, and then she got selected for an accelerated program in the U.S. And the next time I ran into her I was presenting somewhere, and all of a sudden, to a group of Middle Eastern women entrepreneurs, and all of a sudden, and it wasn't a State Department thing, it was after I left, and all of a sudden I realized, oh, there's Sarah Galal. She's right there in the audience, the woman who won our Alexandria competition. So not to presume too much. The talent is universal, as Hillary always used to say, but opportunity is not. And there's no question that when we give women an opportunity, they rise.
Yep, excellent. I'm going to give us about 5 more minutes for questions, and then we'll turn it over to Heather's portion.
And we've got a lot of questions that are coming through. I'm making note of them all, and we will, after Heather's presentation, there'll be an open Q&A, which we can revert back to some of these pending questions or open for additional ones if we don't get to everything now.
Okay, Sarah, do you want to then take one more for Shelley, and then we'll hold the rest for after for the Q&A? Or should we move on now?
Well, maybe I could just say 2 words. I don't know what the questions are, but because the topic today is addressing gender bias. And I think just maybe I'll just introduce my framework of thinking about it, and then we can come back to it later to elaborate on it. But, I think there are 3 important things that both founders who are seeking funding and funders who are looking for deal flow from venture backable women both need to think about. The first one is knowing your audience. And for founders in particular, I'm suggesting that one of the biggest gaps I see when you're thinking about how to get funded is that, first of all, understanding what's the best kind of funding for you. Recognize there's a full spectrum of funding, venture being the last step in that process, I would suggest. But so know yourself, but then know your audience. Not only know them in terms of this funder, what geography, what sector, and what stage of company are they investing in, but really what other particular things about them? Maybe you guys are co-alums of your university. Maybe you have other aspects that you can connect to this person. So really know your audience before you go speak to someone. I cannot tell you how many founders approach us or approach some of our funds and clearly have not done their homework on things that were obvious. I don't even have to go deep about that fund, asking them for early stage capital when they're not an early stage fund, for example. That's just like, that's so basic. So know your audience. Secondly, build relationships before you need the money, right? So find these funders, start finding ways to connect with them, and I can elaborate on later. And then help us all, help the ecosystem out by building awareness around, speak up, share your experiences, and share your experiences in particular with funders, because a lot of funders, you'll be shocked to hear, or maybe not so shocked to hear, don't have a lot of self-awareness about their gender bias. So I can tell a few stories about that later, but anyway, I will let Heather take the gavel down.
Thank you, Shelley.
Sorry, I was unmuting myself. Yeah, I mean, I actually think that's a perfect segue to talk about like particular strategies necessary to overcome investor bias. So I'll give a little bit of an overview of Village Capital and then preview some of the research that that we alluded to that really exposes some of the challenges entrepreneurs face in terms of investor bias. Just as a big picture, Village Capital, our focus is really on reinventing the system. And by the system, we mean the way that capital is allocated to early stage entrepreneurs to better support entrepreneurs that are having profound impact on systemic challenges in economic opportunity and sustainability. I think we all are here and agree that entrepreneurs have critical innovations to things like financial inclusion, clean energy, healthcare, but the way that our capital allocation system is focused, it's very broken. Just to give you a few stats that you're likely familiar with, only 18% of venture capital goes to emerging markets. More than 75% of, more than 50% of venture capital is actually concentrated in 3 U.S. states, Massachusetts, California, and New York. And of the capital that's distributed, we see that only 11% goes to female-led ventures, and that decreases to 5% for later stage funding. That's an emerging market statistic. In the US, it's about, I think, around 15%, so it's not much better. And when we're leaving these entrepreneurs on the sidelines, we're leaving their innovations on the sidelines. So Village Capital, we really are focused on not just thinking about what gets funded, but who gets funded and how that funding is distributed. We started 10 years ago with a very radical idea where rather than going with the traditional venture capital model of having our managing director make investment decisions, we piloted an idea to have entrepreneurs actually make the investment decision on behalf of our investors. So we bring together a group of entrepreneurs, we have them evaluate each other, conduct due diligence on each other. They're in similar sectors and similar geographies, and at the end of the day, they make a collective investment decision on behalf of our fund. We've made 110 investments through this process to date. We call this process peer selection. we've seen an 86% survival rate in our companies, and we've seen that our portfolio is far more diverse than the average venture capital portfolio, with 46% female-led ventures. So this process of actually democratizing entrepreneurship, or having entrepreneurs evaluate and make the investment decision, is leading to commercially promising and more inclusive investment decisions. We're also thinking a lot about investment structures that might be best suited for different sorts of different types of companies. I think Shelley hit the nail on the head when she said venture capital is sort of only one way of, if you think about the venture capital equity model, is only one way of supporting companies, but it's certainly not the only way. There are other financing tools out there, and businesses really need to think about, and investors need to think about, how to capitalize and finance an entire business, and not just one strategy for doing so. So that Village Capital, for the past 10 years, we've been running an investment readiness accelerator program, which is really focused on helping entrepreneurs, the types of entrepreneurs we really want to see scale and grow their solutions, connect with the capital to do so. And that's where we've implemented this peer selection process. And we've seen some promising results, which has led us to evaluate what about this process is working, what's not, what could we learn more about how accelerators could potentially address this huge gender financing gap that we're talking about here, where 11% of capital is going to women-led businesses. So the IFC actually launched a study with the Women's Entrepreneurship Finance Initiative, the World Bank's Global Innovation Lab, and us at Village Capital, to really evaluate what aspects of acceleration can support female-led ventures. And please let me know if I'm saying any terms that aren't familiar, if you have any questions around the framing or about the specific terms that I'm using. But acceleration is really meant to help companies grow faster and connect with capital. And what we found through this study, after evaluating about 2,000 companies that have gone through accelerators, we found that really, really shockingly, and to our dismay, across the board, acceleration is actually widening the gap for equity financing. And what that means is that you can sort of see here on this graph that when startups, there's an apparent gender financing gap when startups start an accelerator. And that gap actually increases post-acceleration. We're really dismayed to learn this, because acceleration is one of the key strategies in the ecosystem to really help companies access capital and grow their businesses. When we dug deeper, what we saw is not that accelerators are having a negative impact on women-led ventures, but that they are having just a really positive impact on male-led ventures. So all male founding teams are seeing the benefits of acceleration far more than mixed gender or all women founding teams. And in fact, acceleration doesn't really seem to have an impact on all women founding teams at all. We saw the opposite when it comes to debt. So as we talked about, equity financing is only one investment tool. There are a number of others. And when we evaluated what the debt financing gap looks like pre and post acceleration for companies, we see that that acceleration actually is having much more of a positive impact on the ability for women to raise debt, and it's having no impact on the ability for men to raise debt. So it's the exact opposite of what we saw with equity, which really led us to question what is it about these financing products and about this process that is leading to this disparity in how capital is distributed. We wanted to evaluate, is it something about how women-led ventures are actually leveraging their capital? And what we saw, perhaps unsurprisingly for those of us who have been in this space, is that women actually outperform when it comes to revenue every dollar of investment goes further in terms of revenue performance than compared to male-led ventures. So for every dollar of equity, women see about 40% revenue generated, whereas we don't actually see a correlation between equity and revenue for men, for male-led startups. And for every dollar of debt, we see that women are actually generating $1.12 on average of revenue, where again, men are only generating 54 cents. So it's not that women are underperforming. We also looked at different characteristics of women-led ventures compared to male-led ventures to see if there's something about the structure of those ventures that might explain the difference. Like people might say, oh, it could be, the sectors that they're in. Maybe they're in less capital-intensive sectors. It could be the geography. It could be the experience of the founding team. And really across the board, running different sorts of analyses, we didn't see a difference that could explain this gap. So it really led us to come to the conclusion and the hypothesis that gender bias is playing a really big role in the ability for women to raise capital, and gender bias is manifesting itself differently with different financing tools. So equity is a very high risk financing tool. Investors need to rely on unforeseen liquidity events. They really need to focus on the vision and potential of the founding team. You'll hear equity investors talk about, particularly at the early stage, how the team is the number one most important thing, and that in and of itself can be very, very subject and imbued with bias. Whereas debt is, although still risky because it is an investment, it's a much less risky financing option, and one where investors may evaluate the financials of the company and rely on the line of sight to revenue much more than equity. And we see, that debt has is less open to bias. So there seems to be a correlation between the level of risk an investor is taking and the amount of bias that investors are bringing to that investment decision. Now, I will say, again, for those of us who are in this space, this probably isn't all that surprising, but it is to a lot of investors who maybe don't think that they're bringing bias to the table. And I think it's important to note that it's not necessarily nefarious intent. It's not that investors are coming in intentionally being biased. It's that they're investing in what they know, who they know, that they're investing based on different success patterns that they're seeing in the ecosystem. And they're really relying on this idea of gut decision making, and that is all imbued with implicit or sometimes explicit bias. So with that, I will open it up to any questions that you might have.
So maybe I could add to that. This is Shelley. What it makes me think of, just to use one story to exemplify what Heather just said, we were about to speak to the GP, a male GP of a very large European fund, and I wasn't even sure he was going to take a call from us, but because he kept insisting in his email exchange that, at their fund, women are treated absolutely equally to the men. But we did get a call with him, and, as he jumped on the phone, that's the first thing he said to Shelley, the women who get through our doors are treated absolutely equally to the men. And I said, that is so fantastic. That's really exciting. So glad to hear it. So how many women-founded companies have you invested in? And radio silence. And what that meant was, number one, either he didn't know or it was zero. Well, P.S., I had looked at his portfolio before I got on the call with him, before we even reached out to him for a call, and hadn't seen any women-founded companies that I could see. So either they hadn't gotten on, weren't showing up on the website or whatever, but, he insisted on it. So then I said, well, listen, that may be true that maybe when women come through your doors, they're treated equally, but did you ever think about what it takes for a woman to come to and through your door before she even gets a chance with your investment committee or investment professionals who are making these decisions? And again, he had no response to that. And the good news is he made a pledge, and we're about to see what they've actually fulfilled of that pledge. But, I think that even well-intentioned people, to give people the benefit of the doubt, and we try to do that wherever we can, there is a horrifying lack of self-awareness. Because it would seem that would be obvious that if you're saying you're doing something, there would be in this business, there's a lot of ways to measure that, but it's a lot of that is out there. And the idea that he wouldn't have thought that that would be a question you would ask, which would be an obvious question when it's a company that had over 100 portfolio companies and not a one showed up as being woman owned. How he could say that women are being usually. So anyway, we try to approach it, the way we've approached funds when we've asked them for pledges to do better, to do more, with the philosophy that we're here to inspire positive action, not to blame and shame. I'm obviously not telling you the name of the funds. So I'm not blaming and shaming them. I'm just using that as an example where it's on all of us to raise some awareness, whether it's with statistics. I've had some great statistics there, whether it's with stories, whether it's simply a personal, private interaction where you can raise awareness without, exposing that person or that fund to, public, shaming or that sort of thing. That's not the point. I think the point is that we are all working on this to try to move the ball forward and get more capital into the system that is targeted for women and is going to women. And let me just add, because we haven't raised this so far, but I hope that it's, I think everyone on this call might be aware that when we're looking at founders of color, women of color, it's even worse. It's way worse. I think the latest statistic for African-American women was 0.6% of total funding goes to, even though today, I was just looking at some current stats today. Businesses owned by African American women represents about 46% of total businesses in the U.S. at least, and obviously it's different in different parts of the world. But yes, so just to highlight that.
Thank you, Shelley. Heather, one quick question before we open it up for the general question section. If debt is the less risky financing option, and more women are getting approved for debt financing, but the problem is, in order to get qualified for debt financing, you need to have a certain level of financial achievement before you can even get debt financing. How can women reduce the risk in investment, in acquiring either debt or equity investment?
Yeah, that's a really
perception of risk, I mean.
Yeah, that's a really great question, and that's sort of that's like the crux of it. We don't know if women are seeking debt more often or getting debt more often because they're being denied equity. Each of these investment tools, whether it's debt, equity, whether it's in more innovative structures like revenue financing, have a particular role that they play in financing a business. And you're right, if you're an early stage, a very early stage business, if you have high growth potential, maybe debt isn't the most appropriate tool for you. Maybe you do need equity to finance that business. And right now, if you're a woman-led business, what this research and other research studies are showing is that it's very difficult for you to access that capital based on the gender makeup of your founding team. And I would put the onus on investors, not just entrepreneurs. So entrepreneurs, access to networks, access to mentoring, firming up their business model, firming up their financial model, all of that is very important to attract investors overall and to reduce the perception of risk in their business. But it's also, I think, on investors to recognize what bias they're bringing to the table and therefore what missed opportunities. This isn't just about investing in companies that are more diverse for the diversity's sake, but you are missing out on really high performing, great commercial opportunities if you are leaving 50% of the, of the money on the table, if you're leaving 50% of the opportunities on the table.
Yeah, if I could comment on that as well. You know, when it comes to debt, a couple of things. Women actually apply for debt less than men. Um, and that's been true forever because, you know, we're risk aware and we don't want to generate. The other thing is that, you know, there's nothing more powerful than customer revenues to qualify for any kind of funding. So start there. But having said that, developed countries and increasingly in developing countries as well, we're seeing that, you know, debt is a critical part of the mix. You know, most of us who started businesses bought equipment or other things on our credit cards, or we did entertainment of our business prospects with our credit cards. And that's debt. You know, that's debt financing of your business. Even if it says it's a small amount of debt, it's not, you know, it's not yet based on your business revenues. It's based on your personal, and you're taking personal responsibility for it as opposed to business, unless you have a corporate card or business card. So anyway, yeah, I think that is critical, but it's not all of what you need. And you know, you need to look at things like grant programs. I mean, Heather and I, before this was starting, we're talking about a great grant program that Village Capital and the Aspen Network of Development Entrepreneurs and IFC have put together for accelerators to support women-owned businesses and providing them incentives to help women-owned businesses find the funding to address the issues that, you know, she was just sharing with us. And we you know, we've been following that. We're excited about what you're doing, and you know, we're hoping and seeing if there are ways that we can be supportive of it. But systemically, the other thing that we can do, I think, is what Heather was saying, and Camille, what you were saying too, which is, you know, demonstrate the success. When in our world, in the venture world, what we see is that there's a growing body of research demonstrating that when you invest in women, your returns are higher. So in addition to talking about how we're fueling women's innovation, increasingly we're talking about driving returns through diversity. Because just like in every other aspect of every other business, you know, consideration you would have, when you add diversity to the mix, gender diversity and other kinds of diversity, you will see better returns. And just as a couple of examples of that, First Round Capital, one of the top 10 VCs in the country, did a 10-year research, a review of 10 years of their investments in over 350 companies. And what they found is that the companies that had been one woman founder on it, which was a small percent, did 63% better than the all-male founding teams over a fairly significant sample. Similarly, with BCG, Boston Consulting Group, and Mass Challenge did a similar study over 1,200 companies that they'd invested in over about a decade as well. And they found that the companies that have even one woman founder on them did 23% better. So for an investor, that's huge. That's a huge advantage. So we need to be communicating the advantages for investors, as well as, you know, so that we are getting investors to step up and see that it's in their own interest. Because as our first Canadian fund that pitched to us was a male GP, and he said, look, he said to a room full of other VCs, he said, look, if you're not investing in women, let's face it, women are the most undervalued asset in the world, and this is an arbitrage opportunity. So if you're not investing here, you're missing the opportunity. You know, this is a great opportunity to do better, to invest where most investors aren't even realizing there is value.
Thank you so much, Shelley. I'm just browsing through the questions now, and we have time for maybe one more before we give closing remarks and share your contact details. We don't want to miss out on that. Camille, if you want to switch to the contact details slide, so if anyone does have to leave early, they have that available. But you both alluded to this a little bit in your responses, but I'd like to maybe have the last question be one that Natalie Poston shared. And she asked for advice about how to directly raise and have these conversations within organizations that may be male-dominated and not really having the most open ears to hearing this. And then there's also more of a direct question for Heather, which is, would you be able to share a link to the information about the IFC and the Village Capital work?
You want to start, Heather?
Sure, yeah. So for the link, I believe Shelley was referring to the ScaleX program, which is an IFC program to support, it's an incentive-based program, essentially, which will give rewards to accelerators that help women-led businesses raise more than $1 million in capital, and that's an IFC initiative that I'm happy to that sort of came out of the research that we did with the IFC, and I'm happy to share that link with the WIN team to circulate. In terms of how can we change the conversation with male-dominated institutions, that is a really great question, and I think one of the strategies is data. So showing the research where we see not only a concentration of capital and how capital allocation process is really the disparity within that process, but as Shelley mentioned, demonstrating the commercial opportunities that are being missed out on. So showing data about how female-led teams, mixed-gender teams outperform just male-led teams, which there's a lot of studies out there showing that. I also think that there's something about so if we think about VCs or the general partner of VCs as one primary audience, there's another audience around asset allocators, so the LP community, the limited partner community, and that community really demanding that their GPs have more of a gender equity approach in their investments. And it could be something as simple as asking the question, what is, as Shelley said to one of the investors that she was speaking with, what do your investments look like? Have you even looked at the gender or diversity makeup of your investment pool? And are you asking questions around why it might look a certain way, and therefore what opportunities are you missing? What does your employee pool look like? The IFC actually did great research illustrating unsurprisingly, that those who have money, the venture capital firms that are distributing money, are mostly made up of men. So if we're changing who has a seat at the table, perhaps we're also changing who receives investment at the end of the day. So I think it's a multi-layered strategy of going to different stakeholders within the capital allocation system and having conversations and really showing them the data.
Yeah, and if I can build on what Heather just said as it relates to the limited partner, the LP investors into venture funds, what they're beginning to do, and there have been some really good webinars in the last week or two that we've been sitting in on and or being part of, is a lot of the LP investors, the institutional investors in particular, I'm talking about foundations, retirement funds, endowments, etc. The question they're asking about what does your gender makeup look like is not about what we're doing, which is asking them, who are you investing in? What it's about is the kind of companies you're investing in, do they hire women? Are they good to women in their own organization? So D&I, is one part of what they're asking. And then the other is, what's the impact of the companies you're investing in on the women in the ecosystem and, in the value chain or in supply chains and so forth. And those are critical questions. I mean, we care about women beyond venture capitalists. We want to see good things happening for women in the world. So those are critical questions. But it doesn't address what we're trying to address when we talk to LPs. When we talk to LPs, we're not just asking, hey, are you requiring of your venture funds that they are hiring women, promoting women, whatever? But what we're asking is, oh, and by the way, those venture funds, as they're deploying the capital that you've put into them, are they deploying into funds that will then invest into women founders? That's the question that we're asking. And that hasn't, to our experience, and this is pretty much, when we launched the $1 Billion Fund for Women, it was always our plan to go to the LP investors. We just felt we needed a critical mass of GPs who would be pledged to do this in order to be able to, if they said no, or if they said, yeah, we'd like to do more, which is what the LPs are telling us now, then we have a ready pool of funds that are saying, yeah, we're pledged. Oh, and by the way, now that we're halfway through the first 2-year cohort, we can tell them, oh, and P.S., they're doing it. A lot of people were questioning us in the beginning as to whether or not because this was a quote unquote best efforts pledge campaign, whether they would fulfill their pledges. The progress to date is encouraging. And, we continue to believe that, many of our funds will not only fulfill their pledge, a couple of them have already exceeded their pledge. Now, part of that, I go back to them and say, yeah, that means you didn't pledge enough. But but seriously, it's this is what we really were trying to do: inspire positive action, and then reinforce it by drawing LP investors, which is what they need and want, to further invest in them, so they can do more of that, because that's why the LPs are going to them. So I did want to make that distinction, because we talk about gender lens investing without recognizing what Suzanne Beagle and Wharton had laid out in their SAGE report, starting 4 years ago, and they have a newer one 2 years ago. And that is that there are 9 types of gender lens investing. The type that we do is a narrow niche, what we're looking at, but we think it's a critical niche, because it's the niche that is supporting innovation by women.
Thank you so much, Shelley, and Heather as well. I think we're coming up right on the end here. I know that we could probably use another half an hour to go over this topic. There's a lot to discuss, and we only just touched on the tip of the iceberg. So thank you for all the content that you've shared. I'm going to hand it over to Sarah to give some closing comments. And again, thank you everybody for attending today and for adjusting to joining us via Zoom.
Yes, thank you so much again to our presenters, Shelley and Heather. Definitely, I know there were so many great questions that were coming into the chat that we unfortunately just didn't have time to address. So I definitely encourage you to reach out to the presenters individually. We've already asked them, they're open to it. The more the merrier in terms of remaining socially connected, even while we're physically distant right now. On behalf of the WIN board, again, thank you so much for your flexibility and for joining in. And we hope that for those of you who are in the Washington, D.C. area, you absolutely do join our LinkedIn group and send us an email at winmembers@gmail.com so that we can add you to our mailing list. And so that once we are able to, again, host in-person events, you do come to them. We find that they're always really energizing and exciting, and we leave really invigorated and inspired to continue doing great work together. So thank you very, very much. Please stay connected and stay well. And again, another big thank you to Shelley and Heather, and of course, Camille and Lily for being excellent co-hosts today. Thank you, everyone.
Thanks.
Thank you.
Thanks, guys.
Thank you, everyone.
Bye. Thank you.
Thank you.